Good morning, everybody. Happy Wednesday. You guys hear me okay? We are going to get started here in just a minute. Got some more news this morning and a couple of updates that I think are important. So let's get started here in just a minute. All right. Yeah, good morning, everybody. Happy Wednesday. Okay, let's get started right on time. It's 2 minutes past the top of the hour. Good morning, everybody. Serge Berger here from thesteadytrader.com. This is our Set the Market morning call. As always, if you can just quickly put a yes in the chat box. If you can hear me okay, then awesome. Also, if you're brand new, please make sure you subscribe to the channel. Very important so we can continue to do this morning call. Also, a thumbs up like would be much appreciated so that we continue to grow with our channel here. We just had GDP this morning, so we're going to look at that quickly in the market's reaction. Already did a trade over and trade ops this morning, so that's one thing we want to look at. Then I do want to prepare everyone for Novo Nordisk next week. I want to talk about two-year yields. We're going to start off with that. And then we do have to take a look at SMCI, which is down another 17-18% this morning. And the market rover told us very clearly to stay the hell out of that stock. In fact, it told us to sell that stock a long time ago. I know a lot of people are still holding the bag, so hopefully people will wake up to the fact that there is a better way. Okay, let's get started. So if you have potentially seen this morning, and we talked about it over in trade ops already this morning, if you're not in trade ops, get your ass over there. I really mean that. I told people that I'm actually short this morning into that print. I've closed those shorts already to booked profits. But I also warn people that this GDP report is going to be important. And it is. And the reason why the GDP report this morning is important is because there's a lot of complacency out there thinking that GDP, the first quarter was okay still, and with a lot of front loading of orders and so on and so forth. And it turned out to be a little bit weaker. In fact, if you look at this here on the screen and you look at the GDP report, it actually came in, I think, by 0.3. Which is, I think, quite a bit lighter than what the numbers were. So long story short, equities are selling off. And what's actually really interesting is that the two-year yields, and this is something, if any one of you are new to the markets, meaning you've done this for, less than 12, 13 years, you're still new to the market because you haven't seen a cycle yet, I would really encourage you to watch very closely what two-year bond yields are doing. Now, you may say to yourself, Serge, I don't care about two-year yields. I just want to make some money trading MSTR stock. Then you should stop investing and trading right now because then you're just gambling. There's money to be made in MSTR, trust me, but you need to understand what the bond market does. Otherwise, you're just gambling. So two-year bond yields, very important to understand what's going on here. In my view, if the economic data continues to slow and soften more, we're going to start to see two-year bond yields move towards 2.5%. That is one of the highest probability trades that you can do in an economic cycle, is either be long or short bond yields on the two-year front. In fact, there's a gentleman out there by the name of Stanley Druckenmiller. He basically made his entire career trading that because it's a very low volatility trade, considering the amount of leverage one can take. Typically, it's being done with futures. I suppose one can use options as well, but the pros use futures for this kind of a thing. Anyway, so if you just want to look at some, draw some lines on the chart, then what you'll find is that we've had and we are continuing to kind of bake in this sort of topping phase, and trying to give you some visuals here so you can kind of contextualize this a little bit better as well. And we have very well defined support. So, you know, it could be that this GDP report today is going to start breaking things a little bit. And depending on how, you know, some of the larger institutions want to interpret this, they might start bidding up the short end of the yield curve of the bond market, meaning putting yields lower as they kind of do that sort of flight to safety move. So I would watch this very closely. I'm actually not yet long two-year bonds. I'm watching, just so you guys know, what I really want to do is I want to be long 3-month SOFR futures. That is basically the way that they used to be called Eurobond, Eurodollar futures. So essentially, if I'm long these things, these 3-month SOFR futures, they're, again, they used to be called Eurodollar futures, if you recall. I think they switched over about a year ago or a bit more, from Eurodollars over to SOFR futures. And basically, if those futures go higher, then it means bond yields go down. So that's the 3-month. And the 2-year, it's not the same, but I would expect these to go higher meaningfully if the Fed starts to have to cut rates. I'm very close to doing and haven't gotten my alert yet, but that's one thing that I'm watching very closely. So for what it's worth, for anyone that cares about this kind of stuff, that's what I'm doing. I'm not yet in there yet, but the 2-year yield tells you the same thing. This is the yield chart, right? The inverse of price. So if the economy were to slow and the Fed were to start cutting rates, and I had a conversation with a gentleman, podcast will be out soon, that one of the more prominent people out there in the investing landscape, again, podcast will be out soon, he actually thinks the Fed might start cutting rates as early as this month. I don't know. We'll find out, but if they do, if they're forced to because of some weak economic data points, then you could see the 2-year yield very quickly collapse. SOFR futures go up, meaning bond yields go down, price go up. So that's basically how that works. Not sure if anyone cares about this kind of stuff, but I thought I would show you again because it's one of the top things on my notebook here this morning. Next thing is SMCI. This probably gets a few more people in here interested because it's a chart chaser name. So SMCI is of course super microcomputer, and if you wind back the clock, if you haven't totally erased memory, you might remember that everyone, including your neighbor and your neighbor's dog, your neighbor's hamster, and pretty much anywhere else was bullish on this company because it was AI, it was whatnot, right? For a little bit of perspective, the stock this morning is going to be down 17% at the open because they guided lower. They actually didn't pre-announce, or they didn't pre-announce, they warned they have earnings coming up in a little bit, like, I don't know, a week or two or something like that. I don't know what it is. But they basically guided down. The margins are going to be a catastrophe. EPS was supposed to be like 33 cents. They got down to like 13. I mean, just a horrendous 10% top line shrinkage. So the stock's going to open up about 20% today, gap down. For a little bit of perspective, when everyone got bullish in the stock late last year and early this year, since then the stock had a peak drawdown of 86%. And again, it's going to be down 20% this morning. The way you manage a stock like this to not get sucked in by the media, who's always going to be bullish, is by using the market rover. Okay, and so I'm going to show you guys how we are able to not get sucked into these kind of idiotic stories. All right, so here's SMCI, and you can see we very clearly received a buy signal back in, this is the green background color, when it turned green in July of 22, at around $3.85. Well, once we started dipping into this black area, this is where the stock was trading around 60, just north of $60. That was time to get out, because a neutral zone, like a black background, means it's no longer favorable to be long or short. Just stay the hell out, right? And since then, the stock, again, this morning is going to open up around $27. So that's about here. The stock is down materially from there, okay? So this is how we don't get sucked into these idiotic narrative stories that a bunch of people on Wall Street that have to constantly sell something on TV you know, you know, how we don't follow that narrative. So at this point, what do you do with SMCI? Stay out. It's in a bearish trend. I don't know. There's nothing to do. Again, down 20% at the open. And there's going to be a lot of people on Reddit boards that are blowing up on that this morning. Of course, I'll never tell you because that's not what they do. All right, that's SMCI. That's 2-year bond yield. So those are two very, very big things. In terms of stocks, just quickly, you know, we talked about that SPY chart. I'll bring it up again this morning just because I've been showing it all week. So let me quickly share it with you. That was yesterday's chart. Quickly find it. I believe it was this one here. Nope. Trying to find it. Give me 1 second. Here. This is the chart that I've been showing for the past few days, and here, and again, this is just a very simple S&P 500 SPY chart, and you know, again, well, the case we're making here is that we're probably going to be bumping into resistance. Whether we've already hit resistance or not, we will only know in hindsight. But that's why we use momentum here to guide us in the near term. I don't know what today brings, to be honest with you, and I don't know if any trade deal announcement at this point will save the economic data that's deteriorating. I think, you know, you have to understand that nothing's bigger than the economy, right? And or the markets. And so even if they were to come out and flash some shiny trade deal with India or something, I have no idea. You know, I mean, that could lead to a bounce. There's no doubt about it. But it may be short-lived if economic data really is deteriorating, as it seems to be based on GDP this morning and a bunch of forward-looking indicators. So basically, resistance area in the SPY is somewhere between, more or less between here and maybe as much as 580 or 5,800 on the S&P. I still think that's very possible. So that's the S&P, and then last but not least, I do want to quickly talk about Novo Nordisk. This is a company that they make this Ozempic drug and some other stuff. And they are set to report earnings next week. I want to quickly bring this up again because this is a really important stock. And I think it's important to understand that this company has a long history. They've been around for a long time. And I'm going to quickly share with you what the Novo Nordisk chart looks like so you can see it. Going to quickly find it here. Here. This is what the long-term chart looks like, and I say long-term 35 years. We are now at the lower end of this range, and I don't know what's going to happen, but we're going to wait for earnings. Same thing for Devendra's asking, what about Apple? Wait for earnings. At this point, you have to wait for earnings. People talk about it once earnings are passed. I have nothing to add here before earnings. I really don't. To me, it's a complete toss-up how the stock's going to act here after earnings. I just don't know. What I do know is that earnings are coming up, very important, and then we'll decide after that. What I can tell you about Apple, from a bigger picture perspective, is that Apple is in a neutral trend, is no longer in a bullish trend. So that's what's going on there. So there's nothing bullish about this for now. Neutral trend means nothing to do. We'll update you guys after earnings. So hopefully this was helpful, folks. Again, please make sure you subscribe to our channel. Please give us a thumbs up, like. That's very important so we can continue to do the morning show. See you guys over in Trade Ops here in just a few minutes. And at 11 o'clock this morning, we are going through a special Q&A session for everyone that attended our 3-day boot camp last week. Looking forward to seeing you guys there. Thanks so much. I'll see you back here tomorrow.